Okay, good evening. Today I have interview sessions with Mr. Paine, Jeffrey Paine, discuss how venture capitalists in Jakarta make decisions on screening assessment. This is the interview session for collecting primary data in my thesis research. The interview method is implementing semi-structured interviews, which the questions is using semi-structured approaches. So there will be probability the question is improvisation in the middle of the session. So let me introduce myself first. My name is Muhammad Yusuf Nugraha. You can call me Nuga or Yusuf, depends on your preference. So currently a final year student at President University majoring in business administration. Also conducting a research thesis for my final project at university. In addition, as I have mentioned earlier, the research discuss how the venture capitalists in Jakarta make decisions on screening assessment. Before starting, I would say thank you, Mr. Paine, Jeffrey Paine, for taking the time to participate in this interview session and be the respondent in my research thesis.
No problem. Thank you.
Okay. Anyway, the session will be recorded. So let's start with your profile, Mr. Jeffrey Paine. So could you tell me your full name, Mr. Paine, and your last formal education, perhaps?
Jeffrey Paine, I think Bachelor's of Science.
Okay. May I know the university of last year education, Mr. Paine?
USC, University of Southern California in Los Angeles.
Okay. Also, may I know how long you've been in the venture capital investment or startup field, Mr. Paine?
For my fund is I think 11 years, and in venture capital probably 20 years.
In venture capital, 20 years. Yes.
No, my fund is 11 years. In venture capital, 20 years.
Okay. So right now you're working for the Golden Gate Ventures, right,
Yeah.
Mr. Paine? So
yes.
May I get the confirmation? The Golden Gate Ventures set the office in Jakarta at Jakarta Equity Tower at SCBD. Is that right, Mr. Paine?
Yes.
Okay. So may I know your role at Golden Gate Ventures, Mr. Paine?
Founder.
Founder. Okay. So may I know the industries or sectors investment focused by the Golden Gate, Mr. Paine?
I would say general ICT, so infocom and technology, so software.
Oh, mostly in technology, right there.
Yes.
Okay. For the round stage, may I know the involves rounds for the
Stage.
by the
seed and Series A.
seed until Series A.
Correct.
Okay. May I know the total asset under management, Mr. Paine, for the Golden Gate?
Yes, now it's maybe 290 million.
290 million.
Yeah.
Okay. Before going to the primary questions, Mr. Paine, I will tell you the background of the research first. So, a study by Buckner et al. 2017 revealed that most of founders do not have strategies and ideas to attract venture capital in invest. In addition, Gompers et al. In 2020 revealed that from their research, venture capitalists receive 100 proposals per year and only 4 obtain funding. Furthermore, a statement by Mr. Tezer Firmansyah said in a YouTube video said his company, which is Calibra Capital, received 500 proposals and all the proposals even didn't obtain the funding. So next, according to some journals revealed some criteria factors by venture capitalists to assess in the screening assessment. There are 5 criteria factors proposed in this study, namely team members or management team. Second is product characteristic. Third, market characteristic. Fourth, financial growth. And the last is business model. So the first simple question for you, Mr. Paine, do you agree with these 5 criteria factors that are used by your company on this assessment, screening assessment? And the entire factors or only some of them?
Yeah, I agree. But not in that order, but I agree.
Oh, okay. But only some of them, yes, sir, Mr. Paine?
No, all of them.
Okay. Thank you. Let's talk of each variable. The first one is management team or team members. So the first question is, did the Golden Gate Ventures use the criteria of team members or management team on the screening assessment, Mr. Paine?
Yes.
Okay. Could you tell me why does Golden Gate use the team members for the screening assessment, Mr. Paine?
Why? It's because they are running the company.
Okay. The simple as that, yeah.
Yeah.
Okay. The last for this variable is what components are included in the criteria of team members and how does the Golden Gate Ventures define it, Mr. Paine?
It's quite complicated. So
let me tell the
it's extremely complicated.
Let me tell you such as like perhaps educational background, team qualities, the expertise of each member, or the length time together, or something else.
There's a little bit of everything, so it's very difficult to tell you the weightage or even the list.
Okay.
I can give you a list, but it's a little bit of everything. Yeah.
So let me try to ask by one. Sir,
yeah, you may have the list, right?
Okay. The education backgrounds, is it? Yes, Mr. Paine?
Yes.
Team qualities?
Yes, but it's very complicated. This one is the most complicated.
Team qualities.
Yeah.
The team qualities you measure from which measurement, sir? Is it from the length time together or
no.
from the skill set or something else?
Many. So length and time together is okay. Skill set is okay. Personality traits is important. Coachability is important. How they manage stress is important. How they pitch to me, what's in the pitch deck, are they over exaggerating? Their mental state, do they have bipolar 1 and 2? Like literally, I study their mental health.
Oh.
Right. So the number of years together not really important. Complementary skill set technically important.
Yeah.
But that's also not very important. Right. Serial entrepreneur is important, but in Southeast Asia it's not important. In the US it's more important.
Okay.
Then the rest is more of judgment on how they report to shareholders, how they do updates, how they run board meetings, how organized they are, how high is their full intelligence, which is related to which school they go to, kind of related to what they study at their major in college. What else? Then the rest is more empathy, more do they understand the market? Do they know they don't know anything? Or they pretend they know everything?
Okay.
Right. So there's many things, but it's 80% personality.
Okay. If I may, for asking deeper from from mental health. So, how do you judge the mental health? So, if I can get the answer.
By talking to them, so I can't.
Oh,
Yeah, that's why it's complicated.
okay.
I judge people in 10 minutes, so I know if they are talking nonsense. I know if they're bullshitting. I know if they are lying to me.
Okay.
I know if they cannot handle money. I know if nobody likes them and nobody will join them for long. People will leave after 2 years. I know.
Okay.
So it's very hard to, very hard to say.
Let us go into the second variable, Mr. Paine. So the second one is the product. Same as a previous question. Did your company use the criteria product for the
Yes.
screening assessment? Okay.
Yes.
Could you tell me why your company use it, Mr. Paine?
It's mostly execution ability.
Execution ability.
Can they build and ship product that people want? Right. Some people say they can, but they cannot.
Interesting.
Then the other one is how obsessed are they with the product? Like good product founders tends to be super obsessed with their product. So they know every single detail. They know why this button is here. They know why everything is on the website or why everything is in the app.
Okay. Let's continue to the next question, Mr. Paine. What are components are included in this criteria product, and how to define it? Let me try to give such examples like perhaps patents, technology, or uniqueness, or stage of product development. So, could you tell me?
It depends. So different businesses rely on different things. Some rely on IP, some rely on finished product and engagement levels. Some rely on speed and iteration speed. That means your first version is going to be crap, and you know that, and you will change the product every 1 week. Some will take 7 years before they launch a product. So it depends.
So it depends the sector and the business, or yes.
Depends on what they do.
So further to the patents. So could you tell me some sector that need the patents, and the sectors doesn't need the patents?
Patents. Patents is mostly deep tech, life science, right? So you need something special. You may not need patents, but you need know-how, right?
Okay.
That means you are there's only two or three people in the world that knows this. You don't need a patent, because if you're the only 2 or 3 in the world that knows this, you don't really need a patent. So patent is just a number, right? It's just a checkbox. But I think it's more differentiation.
Okay. So for the next question is probably the stage of the product development. For the Golden Gate Ventures itself, mostly Golden Gate choose the company in which stages products. Is it the idea stage or fully developed conceptually?
Post launch.
Or is the company have to get their revenue first, or
need.
before?
No need.
So the prototype, have been production, yes, sir?
Yes, usually. If not, we've invested with nothing before, so it depends on the team. Depends how well we know the team. A prototype is fine.
Okay.
But most of the time, they already have something.
Okay. Thank you. Next variable, the market characteristic. Okay.
Yeah.
As previous, did your company use the market characteristic?
Yes. Okay. This is the most important.
Okay.
not the team. This is the most important.
Okay, the market. So could you tell me why your company use it for the screening?
Because we are not the US. So most of our, in fact, all of our companies, like all the startups that are doing well are copycats. And our market size versus US, India, China, we are too small.
Oh.
So market size is the number one most important thing. If it's not big enough, you cannot make enough money. Then the VCs will close down.
Okay. Next one is what components are included in the criteria of market, so, and how to define it. Let me try to give examples like potential market, size market, market needs, entry barriers, competitive, or market growth itself.
Okay, so it's market size first.
Market size first.
Which is SOM, right? Serviceable obtainable. So market size. And then timing, which is it ready? Sometimes it's big, but they are not ready. Sometimes it's big, but nobody wants to pay you money. Yeah, so market size first. Competition probably second. Because the level of competition dictates how much market share you can take.
Okay.
Yeah, which is so the ultimate equation is market size that you can take. That's the end goal.
Okay. Is the liquidity also, sir?
Liquidity of what?
Of probably the exit, things like that, of the company.
No, exit is not something because we invest for long term, right? And long term is usually between 8 to 14 years.
Okay.
So when you invest, usually there's nothing, nobody cares, nobody wants to buy you, there's no IPO market, etc., etc.
Okay.
Yeah.
Let me try to. You've been mentioned about the timing. Could you tell me more deeper, sir?
Timing is mostly market readiness, right? So the market can be big, but they are not ready for you. They don't understand what you do. They don't have money to pay you. It takes forever to educate them. They don't trust you. They think they can build what you build, right? So they'll outsource themselves. They build themselves. They don't pay you because the culture of buying from startups are not there in Southeast Asia.
Okay.
So it's about market readiness. So that's it's a very simple definition. Are they ready to take risks to buy from a startup? Do they have even money to buy? And then do they understand what they're buying? And after they buy, do they know how to use it? Right. So many big companies they buy, but they don't know how to use it.
So okay, let's go to the fourth one, which is the variable financial growth. Did your company use this criteria on screening assessment, sir?
Depends on what you mean. So if it's revenue growth, yes, but not always because many seed companies have no revenue.
Okay.
So
let me try.
So it's more metrics. It's more like user growth, engagement growth, revenue growth.
So actually, this variable is perhaps similar to the traction, sir, but it is more like the financial, which is the revenue that you've mentioned earlier.
Yeah, I mean the answer is yes, we do look at it, but we also look at companies with no revenue.
Okay.
Because we are much earlier, right? So if you talk to a Series C company, then they will tell you different things.
Okay, sir. So why does your company use this variable, sir? These factors.
Yeah, because the companies are too young.
Okay. Is there any reason, sir?
They're too young.
Okay. That's it. Okay. Next is what components are included in this criteria of financial growth? As an example, perhaps revenue growth or something. Is there any metrics that Golden Gate Ventures measure?
I mean, we measure everything, but the first thing is just revenue. If they can generate revenue, and then we'll see. Sometimes you price it wrongly. Sometimes you market it wrongly. Sometimes it's choppy. So we are just looking for revenue first, and then unit economics later.
Unit
Like
economics.
like gross margin, contribution margin. We look at it later, because in the front you don't really know.
Okay.
Yeah, so it depends on the stage. So if it's like pre-seed, pre-launch, alpha, beta, it's all different. Sometimes they launch without charging because they want to collect information, right? So the first year they have customers, but they don't charge money. Second year they start charging. Sometimes they charge too low, right?
Okay.
So it takes a few years before they adjust. And once they adjust, then you can look at everything. You look at the costs, you look at the top line, you look at margins, then you say, okay, this is a good business. In the beginning, it's very hard to figure out.
Okay. So I deep quest deep asking which round that needs this factor, sir? Is it from the pre-series A or
yeah. So if they do a formal Series A, like a large, like 5 to 10 million Series A, they need this number.
pre-series A or double user? Pre-series A or pre-series E?
No, A, Series A.
Oh, at series A.
Series A. Large one, like 5 to 10 million.
Okay. We go
Series
into
A,
the
yeah, the definition of Series A sometimes is all over the place.
okay. We're going to the last variable, sir, in this study, which is the business model. Did your company use the business model on the screening assessment, sir?
Yes.
Okay. Could you tell me how, why the Golden Gate Ventures use it?
Because that's basically how you make money and how you are valued.
So is it similar to the revenue model, sir?
Similar but not the same.
Okay. I get the. So what components are included in the factor of business model, sir? And how to define it? Is it from the?
It's mostly margins.
Could you tell me more, sir, about the margin, sir?
It's mostly margin. So if you're, let's say, e-commerce, you take between 10 to 30% gross, right? If you do SaaS subscription, it's between 60 to 80% gross.
So
if you are a payments company, then you take between 0.5 to 1.5% take rate.
So if I may say, is this is based on their sector, yes, sir?
Yes, based on business model.
Okay.
So how do you charge? Basically, what business are you? How do you make money? And then how do you actually make money, right? Which is the margin side. Then from there it equates to valuation.
Okay. Based on
then if you have enough margin, then we look at the financial growth, right?
Next question, sir. Based on your company, Golden Gate Ventures, may I know which revenue model, like B2B, B2C, or something else, that they invest more, sir? Is this any specification, like perhaps they're more specific focus on B2B, B2B,
Payments. Yeah, payments is probably one of the best. Not the best, but one of the best. SaaS subscription is probably the best in the world. Is probably SaaS. Then advertising so. e-commerce so, right? Depending on, are you selling other people's things or you're selling your own thing? Yeah, I think the best margins is still SaaS. SaaS is probably the best margin.
Okay. If I may conclude, the main factor is the margin, yes, sir.
The what?
The margin of
Yeah.
the.
Yeah.
Okay.
Yes. So a business is about, is it worthwhile doing? Anybody can make money. The question is how much profit can you bring home?
Okay. This is the last, sir. For other criteria, based on Golden Gate Ventures assessment, is there any other factors that perhaps my study didn't include in, sir?
Yes, there's
Perhaps if I may give examples like probably the attractions or regulations or something else, sir.
let me see. Not really. It's about capital, the capital depth.
Capital debt.
Yeah. So how much capital are there in that region?
In the region, yes, sir. Not
Yeah, in
based
the
on
region. Yeah.
based on
So
the
if your study is Indonesia, then you need to know how much capital is looking at investing in Indonesia. And then how much capital in different stages. Because this is very, very important. If we don't have enough money, then the companies can't grow very fast.
So if I may conclude, sir, is it similar to the economic of Indonesia itself or of a country?
No.
Oh, it's different.
It's the risk cap. So how many VCs are there in Indonesia? That's the easier way to calculate. How many VCs? How big are their funds? What stages are they doing? And then you go up. You have to go upwards, right? You got to go to Series B. Okay, how many Series B funds are there in Indonesia? How many Series C funds are there in Indonesia? That is looking at this sector, right? So if you're targeting tech, then you have to calculate all the capital that is looking at tech in Indonesia. That is a very important criteria. A lot of people don't do research on this. Because if we don't have enough depth, that is a very fundamental problem, right? Even if the company is good, they will take a while to raise money. It will be a bit problematic for them to raise money because there's not enough money.
Okay.
Right? Even if you're good, right? Because what we do and what other fund managers do are very different. Right? The other funds are they are buying whatever, they're buying listed companies, they're buying they don't understand what we do. Right?
Okay.
So the funds that understand what we do is very little. But companies needs maybe 4 to 7 rounds before they go public.
Yeah.
So we need capital for all 6 rounds or 7 rounds.
Okay.
Right. So that's the first thing. The second thing, which has never been researched before, is what happens if the capital providers are bad at what they do. Right. That means they're investing in bad companies. What happens to the ecosystem? Nobody researched this. Right. But this is a bit too complicated. So for you, the missing criteria is part of ecosystem is capital depth. Yeah.
Okay. If I may ask you next, is it related to the liquidity of exit itself, sir, or not?
Kind of.
Kind of. Okay.
Kind of.
A little bit. Okay.
Yeah, kind of. Right. Because if we have one IPO from Indonesia every month, then and they're all making money from air for everybody, then there will be more money coming to Indonesia, right?
Yeah, sure.
Yeah, but we don't have it. But in order to have it, you need money.
Yep.
Chicken egg, right? Yeah. If we have no money, there's no IPO. If there's no IPO, there's no money. So where do we start? We start with money.
Okay, the
We
capital.
cannot start with IPO, right?
Yeah, sure.
Yeah, you cannot start with the chicken straight away. You have to start with the egg first.
Okay. So, is there any factors, sir, from the Golden Gate site itself?
What do you mean?
Is there any criteria factors that Golden Gate Ventures use it
For?
besides the capital debt?
Or what else is it?
Is there any, sir, like traction, as you mentioned, sir? Is it important or not, sir, for the Golden Gate?
No, market size, no, number one thing.
Oh,
Yeah, traction, because we are early stage, traction will come later.
okay.
But if your market is small, I don't care what traction you have, you'll still be very small.
Okay.
Right? If your market is small, I don't care who you are, the company will still be very small.
Okay.
Right? No. So the analogy is very simple.
Agree, sir.
Yeah, you need to be 2 billion in 10 to 12 years. That's it. If you're not 2 billion, we cannot make money. That's the very simple math.
That is interesting, sir. I think that's all for today's session, sir. Before end the meeting, can we take a picture, sir? Through the screenshot, Mr. Pin?
Maybe not now, but I can send you my photo.
Okay, let me just screenshot this off.
You can take. Just go ahead. Yeah.
Okay, I think that's all, sir. For today's
Okay,
session.
thank you.
Thank you very much, sir.
Thank you. Take care.
Thank you for the insight.